Hello and welcome to the closing beat, everybody. Happy Wednesday to you. How you doing out there today? Good, good. We are financial advisors here at Jazz Well. Thank you for joining us here on our show. I will move that out of the way. We will do our thing today. We're going to talk about the stock market. We're the only advisors that can talk about investing, like true, what's happening, how to decipher things, sector rotation. I saw the comment out there. So most advisors are like, yeah, whatever, planning. You know, we do that too. Actually, while other advisors are playing checkers, we are playing chess. Our ideal client, listen carefully, our ideal client is someone that remembers the magic and the possibility of anything. Watching David Copperfield walk through the Great Wall of China, watching him fly over the Grand Canyon, just mesmerized by what someone can do. And as an adult, you know it wasn't real, but the process, the magic of that, that's our ideal client. And someone that is also getting excited about him making the freaking moon disappear. I'm so excited about that. If you didn't know, David Copperfield says, it's going to make it go away just for a little bit, and then I'll put it back. Really, really cool promos coming out there. Our Wine and Wealth tomorrow, which is for clients. You can join us in the dojo. Eric will be joining you. He is going to break down the good, the bad, the ugly, and the geeky stats of velocity banking, the actual math and how all of that works. He's not a fan, I'm not a fan, but he's going to break it down and show you why it looks impressive and why reality tells you a different story. And so that'll be tomorrow. Wine and Wealth. Okay, so this will be a quick one here today. Mortgage applications come out. They're up 5 weeks in a row. Got to tell you this. In my neighborhood, I'm selling. I told my wife last night, pack your stuff. Let's go. We'll go together. I'm not kicking you out, but pack your stuff. Because homes are still selling for a lot of freaking money. It's just kind of impressive. But mortgage applications up 5 weeks in a row. Really, really simple there. The 10-year continues to rapidly fall. I'll bounce around just a little bit here if you don't mind. Here, well, this is a 30-year. So if we look at the 10-year note, we're back to the 200-day moving average in rapid fashion. Right? But is it that fast? It got me thinking like, whoa, are we missing something here? Is this a fast rally or is this kind of normal? Well, we looked at pullbacks from highs, actually, so what we're going to do is I'm going to show you a chart that's going to look inverted, right? Because remember, as the 10-year bond price goes up, the yield goes down. So we're going to look at the yield here real quick. And if we bounce over here and take a look, this is the current rally in the price of bonds. In other words, yields have fallen this much. Well, if we don't have to look back far, just look a little bit. You go, was this abnormal? No, this rally or decline in yield is actually kind of normal. This is the pullback off of highs. In other words, we hit some high. How did we pull back? In this case, if I go over here, this is the low. It's the same thing. And we had a quick little bit of a rally. Well, it's actually not all that rapid. You know what I mean? So there's nothing interesting happening here other than the fact we had really high rates, and now they've come down almost a full point, but still a little bit of work to do. So hold your horses, right? It's really sort of exciting. It's fascinating. We love to see that cheaper borrowing costs. But in the grand scheme of things, it's not all that interesting. If we go over to the S&P here we go. I'm going to teach you something. Remember the stock market this year, this doesn't always happen, but the stock market this year is behaving almost exactly on average. Meaning what it normally does day to day, what it normally does week to week, month to month, intra-month, all year long. All of the stats that we've been sharing with you, the stock market, it just does it. It's just happening that way. Well, this is no different. If we look over here, this month so far, the S&P is flat, okay? And it's young. We just started this month here, so not really expecting a whole lot right off the gate, I guess, like you would say. But why is the S&P flat? Well, remember, and I'll show you this time, we talked about this, that if you look at the blue line, this is the performance intra-month through December, the average. And this is the long-term average. We add the 10 years just to see if there's any difference there. But we're focused on a blue line here today. We know, and I told you the other day, the stock market likes to have some kind of gain, roughly just over 0.5%, and then it tends to pull back to the middle of the month. Your Santa Claus type rally, Jesus, good God, man. He's just having a good time. So we get to the middle of the month, right? And as we get to the middle of the month, then if you have a Santa Claus rally, that's when that sort of thing starts. Okay, no problem. But we know that there's about a 0.5% range. Look at what the stock market is actually doing right now. So here's the current month to date, the intra-month month to date, right? We know that as we go over a 0.5%, that's your red line there. Oh, look what happens. The algorithms know this. The smart people know this. They go, that's more than we should be accomplishing. And we fall back down. We fall back down and go, well, that's less than we should be accomplishing. I didn't draw this. I just put the lines on there relative to the stats. We ponder our thoughts here, right, kind of hovering sideways as we do. You have a big day and goes, well, that's more than what we normally do. And what do? We sell off just a little bit over what we should have at the end of the day. So the stock market here is really fascinating because it's doing exactly what it normally does. There is no assumption of a 3% rally in December. That would be way out of average, right? It just wouldn't be normal. And the stock market this year hasn't done anything abnormal. Why would it change now? We need news. We need a catalyst, right? Something there. So if the market is just telling you I'm an average performer this year, give or take a little bit, I'm just going to do what I do. Why is that going to change now? It's not going to change now. And so therefore, until we get ourselves either to the middle of the month or find some sort of catalyst to shock us one way or the other, we know that this is about what you're going to get. That's the range to expect in the beginning of the month, right? And I'll even argue in the last 10 years, it's pretty much the same range, just the 10-year average there, except it's flipped. Okay, well, we're not doing that this time. We're not negative. We're not, well, we are at the moment, but we're not flipping back under, having losses and they're getting bigger and bigger. So we're not really participating along in that same stretch there. Same thing I might point out that if there's going to be a turning point, it tends to be right smack in the middle of the month. Not so much for the last 10 years, comes later, right towards the end of the year, but the average is to show a little bit of that. All right, so just wanted to share that with you, that the market it's doing what it's supposed to do. So there's no need to assume that there's excitement or problems or whatever. I will maybe just say that's the S&P. If we look at the Russell, that's a completely different story. People want to be in the Russell. People want to be in small caps and kind of in mid caps as well, but more so the small caps. Huge movement of money into the small caps there when everybody's chasing the large caps. Love to tell you I told you ahead of time rather than tell you I told you so. That's kind of my favorite thing to do there. We've rallied 4%, just over 4% here so quickly, just in a couple days there. It is normal to see a pullback or consolidation. Doesn't mean you're out of the woods, just a pullback or consolidation. The last pop that we had, the Russell chose not to pull back. It chose to consolidate and work that off. Rest itself, get ready for the next rally. Also, I might want to point out that the Russell 2000 went very sharply and much faster than normally happens. It went from what's considered oversold, just standard oversold technical definition, to overbought. And it did it really quick. That's a little bit abnormal. This is the 17th time that the Russell has went from oversold to overbought in a 30 trading day window. Well, is that a good thing? Does that mean that all the wind is taken out of the sails there? Is this going to be rough, or does that mean it's good for going forward there? Let's see. So if you look at those sharp rallies from oversold to overbought, meaning you blink and it's up, right? Anything within 30 days there. A month later, the average is about 3.2%, 3 months, 7.4, 6 months, 9.4, and 1 year, 13.2. And then I put the median there in there as well. But the average is momentum, okay? And I think you guys know this, but I'm not saying a month from now it will be up 3.2%. I'm trying to illustrate that when there's a abnormal move, something that you can recognize as that doesn't normally happen, all we want to do is know, does momentum continue, or do people run away and just say, forget it, I don't want to be in this anymore, that's the end of it? No, the momentum tends to continue for the short-term investor, the mid-term, the long-term investor. Really, really cool to see that stuff. All right, moving along, we talked about bonds already, both the short-term and the long-term. We look at crude oil moving itself back into a multi-year range. Remember, from here, right about $80 a barrel, down to about I'll say $65 a barrel. This, if I could slide over a little bit, this is the range where oil has spent multiple years. with the occasional blip higher and lower. So we're now under $70 a barrel for oil, and we're kind of settling back into that multi-year range. There is a lot of news. Remember, this is why I don't try to guess that a pullback is done in oil. Told you that numerous times. I don't fight the trend in oil, and if you do it and you're successful, you're better than me. You know, I'm man enough and old enough to admit that there. So just keep that in mind. We're back inside of a range. It could get choppy. It could be volatile while OPEC and everybody starts shaking hands, but doing the opposite of what they shook hands on. You know the drill over there. All right, let's go to some stocks in the news, and I'll take your questions if you have any questions. Avis. This was announced yesterday, but Avis is going to do like Costco did a couple years ago. They're going to pay a special one time only, dividend of $10 per share. $10 you're going to get there as an owner of Avis. Nice job. MasterCard. A handful of things here. MasterCard raised the dividend. Basically, they brought it up. It's at 57 before. They raised it to 66 cents there, and then they're going to spend the rest of their money on a share buyback. It's 10 or 11 billion bucks there. So the stock higher naturally because of that news. We know what the drill is there. Ollie's Bargain Outlet happens to be a stock that we own and are currently happy with there. Earnings beat, raised guidance. People shop at Ollie's Bargain Outlets. Hoping to get one near me sometime soon, but so far not too close. British American Tobacco, BTI is the ticker symbol there. I just thought this was kind of fun to look at there. They're having to write down $31 billion, somewhere around there, $31 billion as a write-off, essentially, off their balance sheet to the bottom line, because they make Lucky Strike cigarettes, and apparently we can't get people on Lucky Strikes anymore. You know, that I didn't know that cigarette was still out there. I've seen it in movies and stuff, but yeah, apparently they're just not that popular, and that is going to cost them some of their other lesser-known brands as well. But if you're old enough, you know Lucky Strikes. I think they made a gum at one point, too. ExxonMobil. So ExxonMobil said this morning that, hey, we're buying Pioneer. Okay, that's not new news. We're buying Pioneer, and that's going to allow us to speed up our buybacks by about 14%. So they're doing a share buyback, or they're getting started on a share buyback, adding to it, and it's going to help them speed up the process. I thought something was really interesting here. They did something different. Remember, and I probably can't find it fast enough, remember that we said wherever the economy is, investors like to see that companies are doing what they should be with their money, and that was defined. And I'm sort of stalling because I was hoping I could find it for you. You've seen it. I've joked with it so many times there. But when the economy is on, I got it. When the economy is on the backside of a growth curve or an expansion, right? Which we definitely are at this point. We're somewhere in here, right? When the economy is slowing down, right? We like to see share buybacks. We like to see dividends. You get rewarded for that. I just gave you the example of MasterCard a minute ago. Rewarded. We don't like to see that you're investing for growth, okay? I'm going to throw a little bit of a pass here to ExxonMobil, even though they're not getting rewarded for this right now. ExxonMobil said if we invest and use this CapEx, so if you're looking at a line item, there's what you'd see. If we spend some money here and we invest in something, we are only going to do it if we can get a 30% or greater return. So now you don't have to, whatever they decide to do, you don't have to read about it. You can just say, I know management wasn't going to do it if they were going to make 5% for 10 years. They want to make 30% off their investment. Those are the types of deals they're looking for, and I haven't seen that in a while, where they clearly said it like that. Very fascinating. It also holds their feet to the fire a little bit, that if they do spend some money, they see a huge profit there, right? Really, really cool. And then all the green energy stuff that's going on right now with them as well. Lobbying, all that stuff. Okay, tomorrow you got Dollar General, Broadcom, DocuSign, Lululemon, Restoration Hardware. That's always a fun one. I like to look at their earnings there, but let's see how much more expensive stuff they could sell. And then Vail Mountain Resorts, right? Vail Resorts. Yes, that's going to be them tomorrow as well as we get into the ski season. All right. Take your questions if you have any predictions on how he's going to make the moon disappear, or questions that you think I could help with. Doc, yeah, you might be looking at it like that. You go ahead. All right, they're not getting rewarded. There's no action being taken, I guess, at the moment besides Pioneer and some really small other deals. But it was kind of cool to see that they would suggest that, you know. Very neat. Useful. Oh, I love it. Who was up the most today? Oh, the leaderboard. We got a leaderboard?
We do.
We do have a leaderboard. Let's go to it and see what's going on.
It's actually the exact same. Yeah, not a lot happening today. But yeah, it's still Alana, Eilish, Terry, Becky, and Aaron. Is that right? Did I read that right?
The same? Well, I guess, yeah.
Yeah, not a big move, not a lot of guesses up there, so.
So the spread between your beliefs in these people, their spread between their beliefs is that the market will be more volatile. You know what I mean? Because people aren't guessing in a tight range. There's a wide enough range where the market can move 0.5% and the leaderboard doesn't change, and or those are the only people playing.
Your audio broke.
Me? No. Oh, I pressed this button. Here. Ta-da. I think that's what the question was there, though. Since there's no understanding stock for SPX options, what happens if the contract expires in the money? I think what you're... What? What? Oh. I don't know. We'll do one of these. No, that ain't gonna do it. I don't know. I bumped it. Cheap stuff. Couldn't tell you. I think you're asking about the SPX options. They expire to cash, so it's a cash transaction. Do I sound like a do?
You know, people want to battle through it. They can stick around while you answer questions.
What about yours? Do you sound?
It's every. That's all up. Yep.
Ah. Okay, I was done anyways. I was done anyways. I will wrap it up there. We'll be back tomorrow to do this all over again. Thank you for watching, and we'll see you then.